G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel, and in this episode we're going to be taking a look at my net worth. So I thought it was about time to do a net worth update. It's been a little while since I've done one of these kind of videos. So if you like this kind of content, then please make sure you leave me a like so I know. So we're gonna delve into my net worth. I'm gonna break it down where all of my assets are, what my liabilities are, so you can get a little bit of an insight and compare that to my previous video on what my net worth was. So anyone that's been following the stock market and the real estate market over the last couple of years knows that it's absolutely gone crazy. And there's a few reasons for this. One of those reasons is that interest rates have dropped drastically because of the issue that we've been facing around the globe in the last 2 years or so. And the other thing is because there's been so much money printed, there's so much more money in the system, which means that the currency as a whole has been devalued. We've seen a little bit of inflation, but the way they measure it, it's not the full story. And maybe it's not the real estate's getting more expensive, it's that our money is becoming worth less. But nevertheless, we can speculate all day about what's happening with the economy. All we want to know is that our net worth is growing in the right direction. And I wanted to delve into mine so you guys can get a little bit of an insight so you can see that over time how things change when you're holding assets. So in the last 3 months or so, Sydney has been in complete lockdown. We haven't been able to work. I've only been able to do a few things such as lyric videos for people. Hasn't been the actual proper shoots where we go out in the field and work. So it's been a really terrible time for business. Absolutely terrible. So on that front, I've actually been limited on the amount of income I've been able to earn. There's a little bit of government support, but it's pittance compared to what I would normally be doing. So, I'm just glad there is something there, but we need to factor that in when we're talking about net worth growth. So if we go from the top, we're talking about assets to start with. So I have my primary place of residence and property has grown in value over time. Based on comparable sales in the area that I live in, this particular property would sell for about $1.11 million, which is crazy considering that we bought it for about $820,000 only a couple of years ago. So we've seen some remarkable growth there. On top of that, we have our investment property in Queensland that has also grown in value, and based on comparable sales in the area of Redlands Bay for a 4-bedroom home, we're looking at a price of around $620,000, which is also fantastic considering we bought it for about $550,000. And of course, I have my stock market portfolio, which at the moment is worth $139,000 roughly. So this has actually seen a drop recently. I've loaded a lot of extra money in, so it's kind of about the same, but we've actually seen a percentage decrease. Still in the black, which is fantastic. But we've seen some dips in stocks such as Tattooed Chef, Dropbox and CrowdStrike. They've all been hit with the broader market. So of course you do see a little bit of ebb and flow with these kind of things. So this would be, I believe, quite a bit higher if we hadn't seen that dip. But I'm hoping that in the future, based on some of the companies that I've invested in, this is going to rocket quite significantly. So that's around $139,000. Of course, we have our contents in the house, which is about $30,000. Our car, which can value at about $10,000. A super is about $4,300. And of course, bank accounts, I'm looking at now a total around 10 grand or so, something around there. I like to keep more cash in assets for obvious reasons. So the total that I hold in assets is $1.91 million. So it sounds like a lot of money, which it is, but of course I've also got liabilities attached to that. So these are things like mortgages, debt, stuff like that. So of course we need to take our assets minus our liabilities, which we're going to do now. So at the moment we have over $1 million in loans. Now that sounds like a scary number, but if it's making you money, it doesn't really matter as long as your payments are completely covered. So we have a mortgage of $479,000 on our property in Brisbane. We have our construction loan as well as our land loan and a cash out refinance on this property, which just looking at the figures here looks like about just over $500,000. And of course there is zero credit card debt. I don't carry any credit card debt. Basically, when something comes in, I pay it off instantly. So our liabilities add up to $1.01 million. Now, these are, of course, loans that need to be paid off over time, but because our property in Queensland is cash flow positive, that means that we have renters that are paying for that every single month, which is fantastic. So if we take those figures, we take all my assets and we minus our liabilities, what we're seeing is we're getting a figure of $901,000. So we've actually seen a bit of an increase since last time, which is great. You know, I've had a little bit of work I've been able to do, but most of this for the first time ever has been asset appreciation. And you'll see it's been quite a significant amount. Now, obviously that is to do with the times, but of course, these will continue to appreciate over time. You'll see some ebb and flow. Things might go down, they might go up, they might go down. We just don't know. But over the long term, property in Australia has continued to appreciate at a drastic rate. And of course, the stock market continues to grow in value as well. So I guess the message of this video is to make sure that you're purchasing assets that are going to help grow your wealth in the future. Every single day, every single week, every single month, every single year. Cash is becoming worth less and less. So if you're holding on to cash, you know, chucking it in the mattress, just expecting to get bank interest, you are losing money every year. So it's the people that are holding assets which are going to continue to see the growth in their net worth, just on that alone, even without working. So you'll see as you start to accumulate more assets, that net worth growth will be faster. So we're looking at purchasing a property before the end of the year. We'll be building another one up in Queensland because we feel that a lot of the reasons and the catalysts that we built our first investment property are also going to be there for this one in a slightly different area to diversify the risk, of course. So I'd be really keen to hear what you guys think about this one. You know, how are you traveling on your net worth journey? You know, are you able to work? You know, hopefully you are. I haven't been able to, so I'm really looking forward to getting back into that. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. Really helps to get these videos out to more people. If you want to get yourself a free stock, then I have a link to Stake. If you put money in the brokerage, they're going to give you a free stock, GoPro, Dropbox, or Nike. Fantastic, free money. And of course, I have a link to WeMoney as well. So if you want to track your net worth, this is actually the app that I use to track all of that, links to your bank accounts and all your things, and is completely read-only, fully encrypted, so very, very safe. They'll give you $5 just for signing up with the app, which is fantastic. So thank you guys so much for watching. Please make sure you like and subscribe. My name is Seeney, and we'll see you later. We'll be right back.